What is going on, everybody? We are back again with another video, and in today's video this is going to be not so much as a trade breakdown, but how I identify a high probability setup. And I'm going to be using USD CHF, going for a top-down analysis from the monthly to the weekly and the daily, illustrating a market maker buy model. Now, everything that you see in this video is going to be something that I've already taught multiple times and shown you through multiple illustrations and multiple trades that I've taken and posted on my page. So everything that you see here should not be anything foreign, and if it is, definitely go back and rewatch some of my previous trade breakdowns. But like always, what I do here is I start off with a naked chart, and I have USD CHF on a monthly standpoint. So I want you guys to pause the video, review this, look at this fractal area of price action, and tell me what you see. Mark off your annotations before I show mine. And now I hope you got that right, because it was pretty simplistic. On our monthly standpoint, we have here a run on external range liquidity, this old low, and we had a dealing range from this swing high to this low, and the month of January has an inside monthly bar. So we're expecting expansion for the month of February and price to draw into this premium internal range liquidity pool. So for me, this was already clear as day, and I could look at this and tell you a draw in liquidity within 10 seconds of looking at a chart that this was going to be going and drawing into the premium bearish fair value gap. Now that we identified the clear draw in liquidity on our monthly chart, we're now going to look at the weekly chart as well. And again, right off the bat, your draw in liquidity should be obvious within 10 to 15 seconds. And already, after price ran that monthly low, we found a swing low that formed here. Then price created a weekly bullish fair value gap that got traded into. So this is our weekly internal range liquidity pool. And once price reacts off that weekly internal range, you expect price to draw into the weekly external range, any swing high. And then eventually our monthly premium internal range liquidity pool. So far, we have a clear draw on our monthly chart, and we have a very obvious draw on our weekly chart. And just looking at those displays of price, I was able to identify where it was going to and where the draw on liquidity was within 10 seconds of looking at it. Now, dropping down to our daily chart, we have the same ordeal. We have price dropping into a daily bullish fair value gap that is in discount of this swing low to this swing high. This is our dealing range. So we have price dropping into this internal range fair value gap to then eventually draw into this daily external range. Now, from this standpoint, you may ask, why didn't I look to execute or enter down here? Well, there's two things. We didn't have price close above any swing high on the sell side of the curve, and on top of that, we didn't even have price close above this bearish fair value gap until it was already too late and price created a directional swing, which is the dealing range that I have marked off here. So there was no means of opportunity, at least for my interest, that gave me high conviction to go long at. So I waited, I was patient, and I wanted to hunt the opportunity that was the highest probability to me. And that was this daily bullish fair value gap and discount of the daily dealing range to draw to that external range high. That was for the weekly and the daily. All right, now a quick pause before going and continuing the video. I wanted to tell you guys about the promotion that Day Funded is actually running currently right now that I just hopped onto. They're currently running a promotion where you buy one challenge, you get one free plus 50% off. So let's say you wanted to buy a 200K evaluation account. That would typically be $900, but this 50% off coupon is charging you $450 and you're getting 2 accounts. 2 100Ks would run you about $235, 2 50Ks would run you $165, 2 25s $115, 2 10Ks are $65, and 2 5Ks are only $30. Check out their Discord for full-time customer support and their Twitter. You can see their proof of payouts. Definitely recommend hopping on this promotion. I'll have the link in the description below. Capitalize on this opportunity, get funded, get a payout, and best of luck to you if you do it. And if you know in my previous videos, you know what to do when price reaches down into these daily gaps. You just watch price for the hourly chart or the 4-hour chart, because it was also a 4-hour bullish fair value gap and a daily bullish fair value gap. But this was the week of NFP, so I wasn't able to capitalize on that directional move on the Friday, so I waited until next week on the Monday to capitalize on the trade. But that is besides the point, and you can clearly see that the simplicity in finding these clear draw and liquidities and understanding higher time frame bias, all you need to understand is old highs and lows and fair value gaps and premium and discount. And as you can see, once price reached that internal range liquidity pool in discount, we pushed directly to that external range high, which is also the weekly external range high. And the reason why I'm saying that this trade and this pair was such high conviction was because the monthly external to internal range draw was lining up with the weekly internal to external range draw and the daily internal to external range draw and liquidity. So our 3 higher time frames were all lining up together, giving myself such high conviction that USD CHF was going to move long towards the monthly premium internal range for value gap. Now, again, what do you do after price runs the external range this high? We expect price to draw down into an internal range. So this fair value gap you want to watch for price, and this fair value gap you want to watch for a reaction as well. So you're going to look at the hourly chart and pay attention to what happens when price runs into these levels. And as you can see, once price took out that high, it ran into this daily bullish fair value gap, resting here, then pushed back up, rerunning the previous daily high. Now, you might be asking, why did price react off of this fair value gap and why didn't it react off of this fair value gap here? Now, if you're monitoring price, because we're on a daily chart, and you're monitoring price on the hourly, and you have these daily key levels that you're watching on the hourly, you want to make sure that you're just paying attention to the proper reactions off of these daily key levels when price is pushing towards the anticipation of a higher time frame draw. Because again, keep in mind, we are using a monthly draw on liquidity, this internal range liquidity pool, and we're framing currently a daily market maker buy model. Even if we look to our left as well, what have I said in previous videos? Bearish order blocks on the sell side of the curve can be used as mitigation blocks on the buy side of the curve for PD arrays to form inside of those POIs. And what do we have right here? This is a up close candle, a old bearish order block. You drag that out in price and look at exactly what is inside of there. A daily bullish fair value gap, this internal range liquidity pool that price drawed into after price ran the external range. And we went bullish off of it, continuing to our anticipated draw in liquidity on the monthly chart. And you can clearly see, fast forwarding in price, we didn't even blink an eye, and this was a clean and smooth monthly key level to frame a daily market maker buy model, drawing into that monthly premium internal range liquidity draw. On my streams, I'll go much more in depth and just show you guys exactly step by step, but this is just showing y'all the most simplistic and obvious way to view price to identify what is high conviction and what is not. Because when I narrow down my watch list and what I'm looking at for the week, it takes me no more than 10 seconds to identify a drawn liquidity, and if it takes me any time longer than that, I label it as low probability and I move on to the next pair. But I always do monthly, weekly, daily, and look for any internal or external range liquidity pool tags. If I see nothing, then I do nothing and I move on to the next pair. And you can see with USD CHF, I was able to identify something on the monthly, identify weekly, and the daily chart. So that to me in itself was how I labeled USD franc as a high conviction, high probability, long trade market maker buy model to the monthly premium internal range liquidity pool. Now, I hope you guys enjoyed this video. I know it is more simplistic and it's just me giving my more so of an understanding of how I identify a trade for the week, or how I identify a pair that I pay attention to and narrow down to potentially make an execution on. But I hope you guys all have a great rest of your week. Good luck, good trading, and I will catch you guys all in the next video and on my stream that night.